Car insurance is a crucial aspect of vehicle ownership, providing financial protection against unexpected events and accidents. It is a legal requirement in most countries, compelling drivers to have at least a minimum level of coverage. The primary purpose of car insurance is to mitigate the financial consequences of accidents, theft, or other damages to a vehicle. There are several types of car insurance coverage, each serving different purposes. Liability insurance. This is the most basic form of car insurance and is often required by law. It covers the costs associated with injuries or property damage to others in an accident where you are at fault. It typically includes bodily injury liability and property damage liability coverage. Collision coverage. This coverage pays for the repairs or replacement of your vehicle in case of a collision, regardless of fault. It is particularly useful for protecting your investment in a newer or more expensive vehicle. Comprehensive coverage. This coverage protects against non-collision events such as theft, vandalism, natural disasters, or hitting an animal. It provides coverage for damages not caused by a collision. Uninsured/underinsured motorist coverage. This coverage protects you in case you are involved in an accident with a driver who either doesn't have insurance or has insufficient coverage. Personal injury protection, PIP, or medical payments coverage. This coverage pays for medical expenses for you and your passengers, regardless of fault, in the event of an accident. When purchasing car insurance, it's essential to consider factors such as your driving history, the value of your vehicle, and your budget. Insurance premiums are influenced by factors like age, driving record, location, type of coverage, and the make and model of your vehicle. To get the best coverage at the most affordable rate, it's advisable to shop around and compare quotes from different insurance providers. Many companies offer discounts for factors such as safe driving records, multiple policies, bundling home and auto insurance, and anti-theft devices. Understanding the terms and conditions of your policy is crucial. It's important to know what is covered, the limits of coverage, and any deductibles that may apply. Additionally, keeping a good driving record and maintaining a consistent insurance history can help lower your premiums over time. In conclusion, car insurance is a fundamental aspect of responsible vehicle ownership, providing financial protection and peace of mind in the face of unforeseen events on the road. It is a tool that not only ensures compliance with legal requirements but also safeguards your financial well-being in case of accidents or other incidents. Factors influencing car insurance premiums. Several factors influence the cost of car insurance premiums. These can include driving record. A clean driving record with no accidents or traffic violations typically results in lower premiums as it reflects a lower risk for the insurance company. Age and gender. Younger drivers, especially males, often face higher premiums due to statistically higher accident rates among this demographic. Vehicle type. The make, model, and year of your car affect insurance costs. Expensive or high-performance vehicles usually have higher premiums. Location. The area where you live can impact your insurance rates. Urban areas with higher traffic and crime rates may have higher premiums compared to rural areas. Coverage and deductibles. The type and amount of coverage you choose, as well as the deductibles you opt for, can significantly influence your premium costs. Credit score. In some regions, insurance companies may consider your credit score when determining your premium. A higher credit score may lead to lower premiums. Annual mileage. The more you drive, the higher the risk of accidents. Lower annual mileage. Emerging trends in car insurance. Telematics and usage-based insurance, UBI. Many insurance companies now offer telematics programs and UBI, where a device is installed in your vehicle to monitor your driving habits. Safer driving behaviors, such as obeying speed limits and avoiding hard stops, can lead to discounts on premiums. Digital insurance platforms. The insurance industry is increasingly moving towards digital platforms, allowing customers to manage their policies, file claims, and communicate with insurers online or through mobile apps. Artificial intelligence (AI) and predictive analytics. Insurers are leveraging AI and predictive analytics to assess risk more accurately. This can result in more personalized premiums based on individual driving behaviors and other relevant factors. Autonomous vehicles and insurance. As autonomous vehicles become more prevalent, the landscape of car insurance may change. Insurance models may shift towards covering manufacturers for software and hardware failures rather than individual drivers. Pay-per-mile insurance. Some insurance companies are offering pay-per-mile insurance, where premiums are based on the number of miles driven. This can be a cost-effective option for individuals who don't drive frequently. Cybersecurity coverage. With the increasing connectivity of vehicles, there's a growing need for insurance coverage that protects against cyber threats and hacking attempts targeting the vehicle's systems. Environmental considerations. Insurance companies are beginning to take environmental factors into account. Some offer discounts for hybrid or electric vehicles, which are often associated with lower risks and maintenance costs. Community-based insurance. Some startups are exploring community-based insurance models where groups of drivers with similar risk profiles join together for coverage. This approach can promote responsible driving within a community and potentially lead to lower premiums. Challenges in car insurance. Rising repair costs. The increasing complexity of modern vehicles, with advanced safety features and technology, has led to higher repair costs. This can impact insurance premiums as insurers need to account for these expenses. Fraud prevention. Insurance fraud is a persistent issue, and insurers continue to invest in technologies to detect and prevent fraudulent claims, which can contribute to overall cost reduction. Regulatory changes. Changes in regulations, such as minimum coverage requirements or legal frameworks for autonomous vehicles, can impact the insurance industry and the coverage options available. Climate-related risks. The rise in extreme weather events can lead to increased claims for damages caused by floods, hurricanes, or wildfires. Insurers need to adapt to these changing risk landscapes. Data privacy concerns. As insurers collect more data for personalized pricing and risk assessment, there are growing concerns about data privacy. Striking a balance between customization and protecting customer privacy is a challenge for the industry. As the automotive and insurance industries evolve, staying informed about these trends and challenges can help consumers make informed decisions when it comes to their car insurance. Regularly reassessing your coverage and exploring new options can lead to more cost-effective and tailored insurance solutions.